Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on a few names here. We're going to look at WEED, APH, ACB, Cron, IIPR, and TGOD. Congrats to those of you that took profit on the way up. For those that didn't, hopefully watching these videos, getting familiar with technical analysis and getting familiar with the space and how these emotional cycles work can help us to capitalize on it the next time around. So if you are a long-term holder, these are the kind of scenarios where if you scale out into extremely overbought conditions, the odds that you will be able to reload lower are extremely likely. So whether it's 5% lower, 10% lower, and you don't even have to trade your whole position. Let's say I have a whole long position and I want to scale out a third of that position to capitalize and reload with more shares and compound profit. So I take those third of my position and let's say I break it up into 3 orders and I just sell on the way up, maybe at 42.50, 43.50, 44.50. I don't come anywhere near nailing the top. We go all the way up to $48 and I say, oh man, I should have held. What am I doing? And then next thing you know, we drop all the way down and you can scale back in. And next thing you know, you can have 10% more of that position that you flipped. So again, you don't want to do it without education, but this is the kind of thing where you can educate yourself and be prepared to capitalize on large swings in volatility in the future. So here we had a significant pullback, and the notable pullback was due to institutional selling. The last video talked about how we had a Canadian institution. Again, off the top of my head, I don't have their name and it doesn't matter to me. I don't care who's selling, but we know that one of them was selling $40 million worth of shares and they exited all of their positions. It's worth keeping an eye to see what balancing is going on between these institutions, whether they're buying or selling. But in reality, we can usually see it on the chart and it shows up as unusual volume and unusual price action. And it happened both days, both to the downside and then back to the upside. On Thursday, we could see some unusually bullish action, and we saw that institutions were doing a little bit of buying. But what stands out to me still is the amount of bear volume. So if you saw the last video that I put out last week, sold into the morning strength as anticipated, and there was more weakness even than I anticipated on this pullback. So the bulls have not proven anything, and we must be cautious of the potential that we pull back for the next couple of months. Now, it's not going to be a straight drop. It will be lower highs and lower lows, probably contained, but we have to keep in mind that the next clear catalyst for the sector as a whole is going to be the first day of sales. And I do believe that that's going to be a solid run-up, the week into that, maybe even more than a week. And then the media attention should get a nice little spike there. So I will be looking to play that space at that time. But as of right now, we have the potential that we're going to see things cool off for a couple months because everybody knows we have months to go. Yes, there are catalysts in the short-term horizon, whether it's deals with alcohol companies or the MOUs that are going to be coming out. But all in all, we are now in a bit of a waiting game in this space. So the question is, how much consolidation are we going to see? So on the weekly time frames, consolidation is extremely healthy for WEED right now. And it has this position as the sector leader that it has a lot more comfortability on how much we can pull back while still maintaining an uptrend. And that's not the case for all of these names. So right now, the key level for me on weed is 33.76. If we break this level, that is a loss of the weekly higher low pattern, and that will be notable. At this point, it would require a significant drop. Let's see, we need a $5 drop to get below that point, and that's about 15% from where we currently stand, maybe 16, 17. So that's still notable that we would have to drop a significant amount to get down to this level. But also note that it is absolutely possible for that to happen. So as of right now, that is our longer term target that we're keeping an eye on. Shouldn't say target, but a longer term benchmark. If the bulls are above that level, they're just fine on this weekly trend. On the daily time frame, however, we did not confirm the bullish reversal candlestick. And I was a bit surprised by that. I wasn't expecting a green day. Like I said, I was planning on selling everything at the open into morning strength, which I did. But I expected the bulls to put up more of a fight than this. And again, we have to look at the S&P 500, which dumped at the end of the day and really saw a weight on the bulls' attempt to close with a little bit of strength on WEED. So what I'm watching is a weak bounce attempt and a potential bear flag at this point. And the low of support is 36.17, and if that level breaks, we're going to see another leg down, and there's our weekly higher low just below it. So on the 4-hour time frame, I like the range here in terms of clarity of what we're watching. It's the low of the pullback. The high of the bounce is our new resistance at $41. And if you were watching the early short-term trading on Friday morning, you could see a double top at $41. And shares came out of nowhere and stopped the price from going above it. And you might not even be able to see it. There it is on the 1-minute time frame. Actually, there it is. Yep. So we hit the $41 level. We pulled back a little bit, reestablished ourselves. We pulled back maybe 10, 15 cents. Then the bulls gave it another shot, and it was very clear that there was hidden resistance at $41, meaning the ask was only, let's say, 1,000 shares, and I watched 4,000 or 5,000 shares. These are just numbers as an example, but I watched more shares than were on the ask get bought at the ask, and nothing budged. And then we pulled back again, and that was notable. So at that point, I started taking my profit, exiting all my positions, as was my game plan, and then I would start with a fresh, clean slate. I did miss a beautiful short early in the morning, and that's because I was busy with live, and I had my order filled out, and right when I was going to keep an eye on things, I answered a question, took my eye off it, looked at another chart, and by the time I looked back, the break had already occurred, and I didn't want to chase it down. So at this point, we have our low of consolidation, our high of the bounce, our higher low, so 37.68. I'm going to go short if this level breaks, and we're going to look down to 36.17 as the next level. And our little resistance is here at 39.23. So we can see it's a tightening range on the hourly time frame. If we see a break of 39.23, that's a potential reason to go bullish. If we see a break of 37.69, it's a potential reason to go bearish. Keeping in mind this week is going to be tricky because Monday, Canadian markets are closed, but the U.S. markets are open. CGC and Cron are going to be trading the entire day Monday, and because we don't have the arbitrage with the Canadian side of things, in my opinion, the S&P 500 is going to have a very significant impact in the action we see on Monday. So we're going to break this hourly range on CGC before WEED opens again on Tuesday. So keep that in mind. And then come Tuesday, Tuesday is a half day for the US, and then Wednesday is off for the US, and Canada will be back to trading, but it will not have the US factor. It will not have the S&P 500 as a factor. So there's definitely shifts in the correlations that we're going to have to be watching, and it makes it a little bit more tricky. So I'm going to be a little bit extra cautious with the time constraints this coming week and the holidays and everything. So it's all about this hourly pattern for me and CGC on Monday. And we can see these levels. Support is down at 28.98 and then down to 28.68. And the reason I would go short if this 28.98 level breaks is because of the risk to reward there. So if it breaks, the odds that we're going to break this other support are likely. And then there's a lack of support nearby. And that would be a decent, bear trade. If we did see a bull break of 29.80, then we would be looking for a move and likely would be looking up in the upper 30s from there. So again, going to be watching this hourly pattern first thing, and the break will occur on CGC long before WEED opens. APH, actually, let's go to Cron because Cron's going to be trading Monday as well. So Cron is a bear flag on the daily time frame. We lost the higher low pattern, and right now it is a weak bounce attempt with upper wicks of profit taking. This is not a significant bounce for the bulls. It's a very weak bounce that would have me absolutely cautious for another leg down. So at this point, we had our loss of the higher low pattern, a bounce attempt that's going to just set a lower high. The question is 886 our lower high, or are we going to drop down even lower? And if we zoom in on the 4-hour time frame, we can see the bounce attempt, short-term support is down at 841, and then 815 is the next level. And resistance is at 886. So Cron's a potential to short as well if we lose that first low of 841, the potential that we break 815 and see another leg down. Again, the short-term gains are there for either direction, and that's just because the volatility and the volume's been so good that there's been nice gains day trading, whether you're bullish or bearish. Obviously, I'm bullish on the sector overall, but again, knowing that the daily chart may be at risk of losing uptrends, Cron has already lost its daily uptrend, has me thinking that maybe bear is the direction to be playing for the next month or two. So I'm going to be keeping an open mind to both directions and just reading the chart as unbiased as possible. And it's hard to look at this daily chart and be confident as a short-term bull on Cron. So we have the same levels on the hourly to be watching. And again, I would use the US side of things because it's going to be trading Monday. So looking at the US levels on the hourly time frame, very clear support, 640. If that level breaks, we're looking down at 620 and 609. Resistance is 660 and 674. So just tight hourly patterns to be watching first thing. APH on the weekly time frame, Still holding up, but bulls must hold 1125. If we lose 1125 support on the weekly chart, it's a big setback. And just moved to the wrong chart. So big setback on the weekly time frame if we lose that support level, because that is our base of support over the last almost 2 months. And if we lose it, we're looking back down to 972. There's obviously a lot of space before that next support. Bulls want to keep this base and seek continuation to try and change this trend. Keep in mind that while WEED hit all-time highs, APH and ACB were nowhere near it. And we're still almost 100% away from all-time highs on APH. So there's a very different story on these individual names and where they stand. And the way that this looks, APH is probably not going to see an all-time high anytime soon. Probably not this year, just being realistic. If it hasn't happened at this point, and if we're this far away still, yes, we can see a run up into October. And yes, you know, the bulls could explode for all I know, but it doesn't look likely in this current scenario. So the daily time frame, again, no follow through, weak bounce attempt. We do still have daily higher lows, so the bulls still have the uptrend in that sense. The higher low to hold is 1131 and 1125. So our new low is the low of this consolidation, 1155, but we topped out at 1245 resistance. 1246 and 1245 is a double top, 2 of the last 3 days. And again, the 4-hour time frame, we can show a tightening range is forming. The bulls need to hold this higher low of 1172 and try and make their way back up towards the low $12 range. So tightening 4-hour pattern to be watching, but we're likely going to see a higher open or a lower open compared to what CGC and Cron do in the US on Monday. So the whole sector is likely to be affected to a certain degree with where they are going to be opening. So again, there's opportunity in both directions here. I don't short these names because they're on the OTC and I am not able to, only able to short MJ, Cron, and CGC at this point. But we're still watching and still cautious. If the daily uptrend is lost, then we know it's a setback, and we know that we need to be patient because we could see weeks or a couple months of just lower highs and lower lows on the daily chart. So key support for me is 1125. That is the line in the sand for APH. ACB on the weekly time frame has a little bit more room to work with. I'd say the must-hold level here, it's not really as clear. We can still consolidate, and if we form anything above 717, which we are well above, that would still keep the uptrend intact in my opinion. So there's no major red flags at this point, and we're not going to lose this weekly uptrend anytime soon. The daily chart, we have a potential bear flag. Again, it is a weak bounce. There is no doubt about that. The 4-hour time frame is also in a tightening range. It's a bit better off than some of the 4-hour time frames that we did just look at. So I'm looking at our low, high of the bounce, higher low, and tightening range. So the range right now is 907 support and 950 resistance. If this is another little lower high and we pull back, then we zoom into the hourly time frame to show the range tightening even more. So another resistance is there at 944, and we'll see if the bulls can form a higher low compared to 907. So just chalking it up with the rest in terms of tightening hourly patterns that are likely to break early on Tuesday, potentially even with the open, depending on how much action the US names get Monday. And we'll look for this short-term hourly break to either give us the signal on these names that the bounce is still following through on the daily, or that we are seeing bear flags on the daily and heading back down towards some support levels. So the daily higher low is here at 875, and the bulls really want to hold that level because I'd say 851 is the most important daily support level, and if we break that level, it's going to be a big setback for the bulls. Keeping in mind that always got to be watching the RSI levels. The RSI has cooled off substantially on all of these names, so they are opening up the possibility that we could see another leg down, and how we break from these hourly patterns is going to be very notable Monday or Tuesday, depending on which name. T-God, if you watch the covers we had at T-God, we could see that this daily equilibrium pattern was likely. We were talking about this well over a week ago. Just on the first pullback and the first bounce, after the first couple of days of the bounce, it's such a familiar pattern after a blue sky breakout all-time high and after significant consolidation, you can say that the most likely scenario is an equilibrium pattern. So at this point, we saw this pattern coming in advance about 10 days ago and have been able to just patiently wait for this pattern to break, and that's what I'm looking for. And again, trading T-God F in the US is definitely difficult, and there's illiquidity, but I will trade it if we get a break here, or I should say when we get a break here, of this equilibrium, because it's such a clear pattern. Our higher low just now was 601, and now we're going to look for a bounce and a lower high compared to 730. And then After the lower high compared to 730, we'll look for another higher low. This pattern could go all the way into 2 weeks from now, the second week of July, because we do have a day off on Monday. I would be looking for, let's see, 2 weeks. Need to see a little bit more follow through to make the bulls comfortable. And obviously, if we break this support level, it is a very easy bear play with a lack of support nearby. So this is going to be a good trade to be watching for once that break does occur. And this is the kind of thing that I'll just keep a little notepad next to my computer and I'll write down the tickers I'm watching longer term time frames of. And every morning I'll just check in and say, all right, where do we stand now in the pattern? Are we close to a break? And we get to a point where we know we're so close that I need to watch it, all day for the next 3 days or so once we get to a point where I know a break is imminent. And we're not there just yet. IIPR had its dividend distribution. Weekly chart still an uptrend, nice little higher low. I'm currently all cash in my position. I've locked in profit a few times now on IIPR. And the weekly higher low is the must hold support level of 34.17. And we're looking for a daily equilibrium here as well. So we have the all-time high, the low of the pullback. Our lower high is 37.73. Our higher low is 35.08. And we're watching that range as we head into next week. Break of 35.08, and we're looking down to 34.17. And a break of 37.73, we're looking back to the all-time high, 39.75. So still in control of the bulls overall, but the way that this daily pattern breaks will let us know if this weekly chart has further consolidation coming, and we're going to lose those all-time high streaks for a bit, or whether we get the bull break and head back towards that all-time high. So again, nice tight pattern daily chart is what I love on any time frame. If you give me an equilibrium, it's so easy to know how to play it and manage your risk to reward and put your stop loss levels in. And now we're looking at that on the daily time frame on some of these names. So that's where we stand heading into tomorrow. Keep your eye on CGC and Cron, even if you are not trading on Monday, because it will dictate what we're going to see on Tuesday in terms of where we open. Hope you have a good rest of your weekend. We'll see you soon.